Bitcoin hit $126,000 in October. Most analysts called the top. But the on-chain indicator that's never missed a cycle peak is at 1.7. If historical patterns hold, we could be 6 to 12 months from the real peak. Most investors ask, is this the top? The better question, where are we in the cycle? The MVRV Z-Score has signaled every major peak since 2013, typically within 2 weeks. Currently at 1.7, it suggests we're in early to mid-bull phase. In 10 minutes, I'll show you what this means, historical comparisons, and a framework for navigating the next 12 months. This is educational analysis, not financial advice. The MVRV Z-Score uses on-chain data to measure market valuation against holder cost basis. 3 components: market value, current price times supply, currently around 2 trillion, realized value, the aggregate price at which all Bitcoin last moved on-chain. If you bought at 30,000 and haven't moved it, that's your contribution to realized value. This represents what holders actually paid. Z-Score. The statistical distance between market value and realized value. Above 7 typically signals extreme overvaluation and cycle peaks. Below 0 signals extreme undervaluation and cycle bottoms. Platforms like Glassnode and CryptoQuant track this metric. When Z-Score crosses 7, historical data shows cycle peaks occur within weeks. Let's examine every cycle peak. 2013, Z-Score hit 10.5. 87% crash followed. 2017, Z-Score reached 9.8 at 19,800. 84% decline. 2021, 2 peaks. April at 6.5, November at 7.1. Declines of 54 and 77%. Pattern. Peak Z-Scores are compressing as markets mature, but 7 remains the critical threshold. Now here's the key insight. What happened before those peaks? March 2017, Z-Score was 1.63 at roughly $1,200. 9 months later, peak at 19,800. September 2020, Z-Score 1.09 at 10,500. First peak came 5 months later. Final peak, 14 months later. Historical range from Z-Score 1.7 to cycle peak, 5 to 14 months, with an average around 9 months. As of November 9th, 23:59 UTC, Z-Score stands at 1.70. Market cap approximately 2 trillion. This reading suggests Bitcoin at current levels trades relatively close to aggregate holder cost basis. Market structure appears healthy by historical standards, not in bubble territory. The October peak at 126,000, followed by correction to 104,000, appears to be mid-cycle volatility rather than a cycle top based on Z-Score data. For Z-Score to reach historical peak levels of 7 or above would require roughly 4 times the current reading. Based on previous cycles, this typically takes 6 to 14 months. If this cycle follows 2017's pace, potential peak by Q3 2026. If it follows 2021's timeline, Q4 2026 to Q1 2027. Several factors distinguish this cycle. Supportive factors, monetary policy. The Federal Reserve implemented 2 rate cuts in 2025. First in September, second in October. Current range, 3.75 to 4%. This represents the first easing cycle during a Bitcoin bull market. However, rates remain elevated historically, and future cuts depend on inflation data. Supply dynamics. Bitcoin on centralized exchanges continues declining to multi-year lows, suggesting accumulation by long-term holders. Network strength. Hash rate reached 1,082 exahash, up 80% year-over-year, indicating strong miner commitment. Risk factors to monitor. Regulatory uncertainty. Policy changes could impact market structure. Macroeconomic conditions. Recession risks could drive broad risk-off behavior. Market sentiment. Fear and greed. Index at 29 shows caution, which is healthy, but rapid sentiment shifts can occur. ETF flows. Institutional flows remain variable and can create volatility. Geopolitical events. Unexpected shocks can disrupt any cycle. The Z-Score provides cycle context, but cannot predict external shocks or regulatory changes. Based on historical Z-Score patterns, here's an analytical framework. Remember, this is educational, not advice. Phase 1, Z-Score 0 to 2, early to mid-cycle, current position at 1.7. Historically, this phase has offered favorable risk-reward for long-term holders. Many investors choose to maintain or increase exposure here, though individual circumstances vary. Phase 2, Z-Score 2 to 4, full bull phase. Expected time frame, Q1 to Q3, 2026, based on historical progression rates. This phase typically sees sustained upward momentum. Long-term holders often remain fully invested during this period. Phase 3, Z-Score 4 to 6, late bull phase. Projected Q2 to Q4 2026. Risk increases notably. Historical precedent suggests this is when experienced investors begin taking partial profits. Common approach: reduce position by 10 to 20% as Z-Score climbs through this range. Phase 4, Z-Score 6 to 7, high-risk zone. Estimated Q3 to Q4 2026. Once Z-Score exceeds 6, historical data shows cycle peaks occur within 30 to 90 days. Risk management becomes critical. Many investors accelerate position reductions in this zone. Phase 5, Z-Score above 7, cycle peak zone. Timeline, Q2 to Q4 2026 or beyond. Every historical instance of Z-Score exceeding 7 has preceded major market corrections within weeks. This is where preservation typically takes priority over growth. Current recommendation for Phase 1. Consider your risk tolerance, time horizon, and portfolio allocation. Those with long-term conviction often view this phase favorably. Set alerts for Z-Score milestones, 2, 4, 6, and 7. Several critical points. Historical patterns don't guarantee future results. Markets can behave differently than past cycles. Z-Score is one indicator among many. It measures on-chain valuation, but cannot predict external events, regulatory changes, or black swan scenarios. Individual circumstances vary. Your financial situation, risk tolerance, and time horizon should drive decisions, not general frameworks. This analysis is educational content about on-chain metrics and historical patterns. It is not financial advice, investment recommendation, or a guarantee of future performance. Always do your own research. Consider consulting licensed financial advisors for personalized guidance. The MVRV Z-Score at 1.7 provides historical context, suggesting we're in early to mid-bull phase, not cycle peak. Similar readings in 2017 and 2020 preceded significant rallies over 6 to 14 months. Current market structure shows healthy characteristics: relatively low Z-Score, cautious sentiment, improving supply dynamics. However, numerous risks exist, including macro uncertainty, regulatory developments, and potential external shocks. For those tracking cycle progression, the framework is: monitor Z-Score as it climbs from current 1.7. Phase transitions at 2, 4, and 6 represent historically significant thresholds. Above 7 has consistently marked cycle peaks within weeks. For weekly on-chain analysis covering multiple metrics including Z-Score, SOPR, NUPL, and market structure, subscribe for updates. Timeline projection: 6 to 12 months based on historical ranges puts potential peak in mid to late 2026. But remember, timelines are probabilities, not certainties. Watch the Z-Score progression rather than fixating on dates. Whether you're observing from the sidelines or actively participating, understanding cycle position through on-chain data provides valuable context. That's the analysis for today. If you found this valuable, let me know in comments. I'll see you in the next video.